The crypto market is a moving target. Just when you think you've got your finger on the pulse of a coin or token's price action, it moves in an unexpected direction. The reality is that getting it right every time is next to impossible. Even so, you can increase your chances of success by leveraging the right crypto tools. That's why today I'm going to tell you about some of the best crypto tools I've come across this year and how to use them to maximize your crypto gains. Before we examine this toolkit, there's something I need to admit. I'm not a financial advisor as I lack the appropriate permit. Education and entertainment are the only things I transmit. So please contact a financial advisor if your portfolio looks like shit. Now, if this is the first time we link up, my name is Guy and I make high-quality content about crypto stuff. If this is the kind of content you can't get enough of, subscribe to the channel and give that notification bell a bump. Okay, that's all you need to know about this crypto buff. Let's look at a few tools that will make the crypto market less rough. I'll start with a quick shout out to Sergio Gallardo at Masari for his excellent Twitter thread about crypto tools, which inspired this video. I'll leave a link to that thread in the description if you're interested, and feel free to hit me with your suggestions about crypto tools I should consider in the comments. And before you ask, yes, all of the crypto tools I'll be mentioning in this video are free to use. Now, the first crypto tool to add to your belt is actually a bundle, and that's Crypto Fees, OpenOrgs, Money Printer, and L2 Fees by CryptoStats, and the Smart Contract Cryptocurrency Gas Tracker by OwnChain. So, starting with Crypto Fees, what this tool is all about is clearly noted at the top of the page. Quote, "There's tons of crypto projects, which ones are people actually paying to use?" If that didn't make it clear enough, Crypto Fees tells you how much people have paid in transaction fees to use a smart contract cryptocurrency or decentralized application over the last 24 hours and 7 days. Crypto Fees is useful because, well, it tells you which crypto projects and protocols people are actually paying money to use. And this can help you assess whether their associated coins or tokens are undervalued or overvalued relative to these transaction fee fundamentals. Keep in mind that some crypto projects and protocols have very low transaction fees. As such, there could still be lots of demand for its coin or token, even though the transaction fees are low. Now, some would argue that higher transaction fees equals more demand, but that's a topic for another time. Now, the next tool in this bundle is OpenOrgs, which, like Crypto Fees, clearly states what it's about at the top of the page. Quote, "DAOs are the new companies. What's on their balance sheets?" If that didn't make it clear enough, OpenOrgs tells you how much crypto is being held by DAOs. And what's cool is you can see which cryptos they're holding in their treasuries by clicking on the little arrow next to the treasury balance. This is important to know because spending by DAOs can be a strong source of sell pressure for a cryptocurrency. This is especially important if the DAO holds primarily the coin or token belonging to the crypto project or protocol which you're presumably invested in if you're a fan of said project or protocol. Then there's Money Printer, which actually has nothing to do with the Federal Reserve. Money Printer is a tool that keeps track of how much annual inflation there is for major cryptocurrencies and how much potential sell pressure this inflation is creating on a daily basis for their respective coins. As with Crypto Fees, it's important to remember that a small annual inflation rate can still translate to a massive amount of daily sell pressure depending on the market cap of the crypto in question. Now, you can easily toggle this setting by clicking on the Issuance Rate and Daily Issuance tabs. L2 Fees is more straightforward, as it's a tool that tells you the transaction fees on Ethereum's most popular scaling solutions, including transaction fees for a simple ETH transfer, as well as a more complex token swap. This can help you save money when transaction fees on Ethereum are high. This ties into the last tool in the bundle, and that's the Gas Fees Tracker by OwnChain, which is seriously underrated, probably because of how the website and the tool is named, which is just gas with many S's. As you can see, the Gas Fees website shows you the transaction fees for most major cryptocurrencies, both in their native coins and in US dollars. This can be extremely helpful when you're trying to, say, move cryptocurrency between exchanges or need to move a token like a stablecoin between wallets. If you want to learn more about how transaction fees work in cryptocurrency, you can check out our video about that using the link in the description. Anyways, the second crypto tool to add to your belt is another bundle, and that's the Governance Tracker by Tally, the Governance Tracker by Messari, and the Governance Tracker by DeepDAO. Starting with Tally's Governance Tracker, this tool lets you see all the most active DAOs on Ethereum, Polygon, Avalanche, Optimism, and Arbitrum. Any DAOs that have active proposals in process are automatically top of the list. Otherwise, it's sorted based on how many active voters there are. I'll quickly note that it's quite remarkable how little engagement there is outside of the top 10 DAOs. Now, what's cool is when you click on one of the DAOs, Tally will show you how the governance process for the DAO in question works in simple terms, as well as the top voters in that DAO and their voting power. Not surprisingly, the top voters in these DAOs are often crypto VCs. What's awesome is that Tally even lets you create your own proposal for the DAO you've selected and gives you a step-by-step guide on how to publish your proposal. Note that you'll need a Web3 wallet like MetaMask for this. Now, besides making it easy to have a say in your favorite crypto projects, Tally's Governance Tracker can be another way to keep track of any sell pressure your favorite coins or tokens could experience, assuming they have proposals waiting to be passed, of course. Not only that, but keeping track of proposals before they're passed can be a great way of getting ahead of an upcoming rally. All you need to do is check when the proposal will be passed, and if you know it's a significant one, you could make an easy profit selling the news. Ideally, you'd catch a bullish proposal before it's even tabled, and that's where Messari's Governance Tracker comes in. This tool also gives you an overview of the most active DAOs on popular smart contract cryptocurrencies, including governance for smart contract cryptocurrencies themselves. Unlike Tally's Governance Tracker, however, Messari's Governance Tracker gives you an overview of all the preliminary discussions going on within these DAOs. This makes it easy to spot proposals that have yet to be tabled and can therefore get you in extra early on a price move before the proposal is passed. Now, the only thing I'll caution is that Messari's assessment of the importance of a particular proposal isn't always accurate, so don't give too much weight to that indicator on the dashboard. Always click on the proposal to double-check what it's about. Then ask yourself whether it's something that could be passed and what it could mean for the price of the coin or token in question. Last but not least, we have DeepDAO's Governance Tracker, which essentially combines the best of the two other governance tools. DeepDAO lets you sort DAOs by changes in treasury value, token holders, and active voters on the homepage. The tool also lets you see both discussions and proposals in real time on the DAO feed. The difference is that DeepDAO aggregates this data to give you an idea of how DAOs are doing in general, be it by active voters or treasury balances. DeepDAO also lets you see which wallets are the most active in crypto governance on the People tab. Interesting stuff, to say the least. Now, if you're wondering why else crypto governance is so important, you can check out our video about that using, of course, the link in the description. Anyhow, the third crypto tool to add to your belt is a couple of Telegram bots, specifically the Ether Drops bot and the Token Unlocks bot. The Ether Drops bot makes it possible to receive a Telegram message about changes to specific crypto prices, when a specific coin, token, or NFT is sent, when there's a change in a coin or token's liquidity, whenever a coin or token is being swapped on a DEX, and even lets you track specific wallets. The Ether Drops bot has been around since 2018, and it supports popular EVM chains such as Ethereum, Polygon, Phantom, Arbitrum, Avalanche, and BSC. I suspect that the Ether Drops bot will add additional EVM chains as time goes on. What's amazing is that the Ether Drops bot has a free version, and though there's a limit to how many items you can track and how many messages you can receive, for most of you, the free version should be more than enough, and if it's not, then the annual subscription options are very affordable. The only downside to Ether Drops bot is that it can take some time to set up due to all the options it offers. Luckily, Ether Drops published a detailed tutorial on Medium, and I'll leave a link to that in the description if you need it. It should go without saying that having the ability to closely track whatever coin, token, wallet, or trade you want is very valuable, and there's no limit to what you could do with Ether Drops bot. I personally use it to keep track of the largest holders of my favorite coins and tokens, the whales, if you will. This relates to the Token Unlock spot, which lets you see when coins and tokens allocated to investors, like early investors and the team, are about to vest, aka unlock. This is important because a large unlock almost always results in a lot of sell pressure for that coin or token as insiders sell at a huge profit. Whereas the Ether drop spot can take some time to set up, the Token Unlock spot shouldn't take more than 2 seconds to get sorted. That's because there's only 2 options: Unlock Info, which lets you see all the coins and tokens the bot supports, and Alert, which lets you set alerts for said coins and tokens. If you're not a fan of Telegram, you can stick to using the Token Unlock's website, which also gives more information about tokenomics, including the total supply, the circulating supply, what percentage of the total supply is still waiting to be unlocked, and when. Clicking on a coin or token provides even more detailed information about tokenomics, including the initial distribution of the coin or token, the vesting schedule, and how much sell pressure the next unlock is going to create for the coin or token based on its current value. If you scroll down, you can even see how much of that coin or token is waiting to vest to specific entities, be it early investors, the team, or the foundation that legally owns the project. This can help you get a better sense of how much sell pressure could occur when the next unlock comes around. If you are a fan of Telegram, I strongly suggest using the bots to set alerts for these unlocks, and you should also take a second to check out our video about the best crypto Telegram groups. That will be down in the description. Anywho, the 4th crypto tool to add to your belt is another combo, and that's Coindix and Stablefish. Funny names, I know, but these are seriously 2 of the most useful tools in cryptocurrency. That's because they both tell you where you can find the highest yields on your coins and tokens. For those who don't know, you can earn passive income on your cryptocurrency by either lending it out on a decentralized lending protocol to earn interest, or providing it as liquidity for a trading pair on a decentralized exchange to earn a portion of trading fees for that trading pair. Note that this is not the same as depositing your crypto with a centralized crypto platform to earn interest. As we've recently seen with these centralized platforms, there's a lot of risk involved, and that's ultimately because you don't own your assets when you hand them over to a third party. When you lend out your crypto or provide it as liquidity on a DEX, you technically retain ownership of those assets. However, this doesn't mean that DeFi yields don't come with risk, because as the saying goes, where there is reward, there is also risk, or something like that. In the case of DeFi, risks can include anything from unforeseen bugs that can be exploited, hacks of centralized elements of protocols such as bridges, and damaging arbitrage trades such as flash loan attacks. There's also a risk of censorship because of the Tornado Cash situation, but let's not go there. With that information in mind, Coindix is best for volatile coins and tokens, and the website keeps track of DeFi yields on just about every protocol on just about every smart contract cryptocurrency there is. What's nice is that Coindix lets you sort protocols by yield and by total value locked, which makes it easy to identify which yield opportunities are high risk. As a rule of thumb, a low TVL or an abnormally high APY is a sign that the yield opportunity you're looking at is extremely high risk. If it ticks both of those boxes, you might want to consider looking elsewhere. Conversely, a very high TVL and a normal or low APY is a sign that the yield opportunity you're looking at carries much lower risks. Even then, though, it's important to do your due diligence by checking how long the protocol has been around, whether it has any audits, and if it's been hacked in the past. Also be aware that yield opportunities on newer or lesser-known smart contract cryptocurrencies inherently carry a high risk regardless of the yield, total value locked, or quality of the protocol, because with these cryptocurrencies there could be unforeseen risks at the blockchain level. Another thing to keep in mind is that the price of the coin or token you're lending out or providing as liquidity will likely drop in value over time because of the crypto bear market. This might be fine if you plan on hodling that coin or token for the long term, but this obviously won't be the case for everyone. That's why you might be better off sticking to Stablefish, which tracks yield opportunities for stablecoins on most major smart contract cryptocurrencies. Logically, the same rules apply when it comes to the APY, TVL, and protocol and blockchain risk analysis. But there are two other things to keep in mind. The first is that the yield for many of these stablecoin opportunities is paid out in a volatile token, meaning that the actual yield might not be worth that much in dollar terms. You can see what the yield is being paid in by clicking on the yield opportunity that interests you. The second thing to consider is that some of these yield opportunities are quite complex, and many involve lesser-known decentralized stablecoins that could depeg if the crypto market collapses or if there's a loss in confidence in the mint and burn mechanism. The last thing you want is to accidentally put your dry powder into the next UST. Now, the last two crypto tools I want to discuss today are related to NFTs, and these are CryptoSlam and NFT Nerds. CryptoSlam is arguably the best place to check NFT prices, especially since the site has a dedicated tab for fan tokens, which are becoming an increasingly popular type of crypto collectible. In addition to prices, CryptoSlam shows you both the number of buyers and the number of transactions for every NFT collection over the last day, 7 days, 30 days, and all time. This makes it easy to spot low-quality NFT collections since they'll often have a small number of buyers with few transactions. CryptoSlam also lets you see which smart contract cryptocurrencies have been the most popular for NFTs over the 4 periods of time I just mentioned. The popularity of NFT-related smart contract cryptocurrencies is something that you should watch very closely if you're one of the folks who believe it's going to be an $800 billion industry in the coming years. Even if you're not, taking note of trends in smart contract crypto popularity relative to NFTs can help you make some profits in the short term. And between you and me, I happen to think that it's the smart contract crypto coins that will capture most of the NFT value in the long term too. If you insist on being an NFT degen, you can refer to CryptoSlam's upcoming NFT Drops tab and make use of the second NFT tool in your belt, and that's NFT Nerds. NFT Nerds must be one of the craziest crypto websites I've ever come across. That's because it provides detailed data about NFT mints and trades on Ethereum in real time. I mean, seriously, if you get a moment, check out the Mints tab to see new NFT collections being generated every block, and check out the Firehose tab to see NFT trades on all the different marketplaces. NFT Nerds even lets you instantly buy NFTs and automatically trade NFTs if you purchase their premium service, which can be paid for in ETH directly from your browser extension wallet. No debit card or credit cards needed because, hey, this is crypto. Now, this barely scratches the surface of all the features on NFT Nerds, but I must stress that the usefulness of this NFT tool depends on your ability to do your research about all these NFT collections. If you need help with that, you can refer to my video about how to find quality NFT collections, and the link to that tutorial will be in the description. And that's all for today's video about the top crypto tools for 2022. So if you enjoyed it, smash that like button to let me know. Be sure to subscribe to the channel too and ping that notification bell so you don't miss the next video. And while you wait, you can check out Coin Bureau clips for emergency crypto updates, or tune in to the Coin Bureau podcast to learn about crypto on the go if you're running late. You can also follow me on Twitter, TikTok, and Instagram for memes and crypto banter, and join my Telegram channel for all the daily crypto updates you're after. If you're wondering which cryptos I hold as part of my portfolio, you can find out by subscribing to my weekly newsletter. It's also where I tell you how the crypto market could continue to ebb and flow. And if you want to support what we do, the Coin Bureau merch store is your best route. It's packed with cool crypto-themed hoodies, sweaters, tees, and mugs, so make sure to get yours before the current collections run out. You can find your way to all these resources and more using the links down below. Thank you all so much for watching, and I will see you in the next episode.